Hello, hello. Many earnings reports today with ASML opening the day. ASML is a Dutch company that is probably the most valuable tech company in Europe right now. And its shares surged 7% as AI boom fuels record orders and upbeat to 2026 guidance. Now, you will see here that analysts expect memory chip makers to increase capacity to mitigate the shortage that we have right now. A thing that really benefits ASML as they are practically a monopoly. And the reason why they're a monopoly is because they have some technology that is allows them to print chips that is super expensive that pretty much everybody is using, even Nvidia. Like think about it like Nvidia being the architect and ASML being the entity that provides the tools for them to be able to do their architectural work. Now, bookings, one of the most closely watched metrics from investors, came in at 13.2 billion euros, about 16 billion dollars. And ASML announced a 12 billion euro share buyback, so they buy back a ton of shares here, seeing that their company is valuable. And I kind of agree with that based on what I have been saying. And based also on the fact that the company's business model is superb right now, practically being a monopoly. Now, the things that we mentioned here, the buybacks and everything, the company said it expects net sales in the current quarter of between 8.2 billion and 8.9 billion euros, and total sales for 2026 to come in between 34 billion and 39 billion. So they previously said they did not expect 2026 total sales to be below 2025, understandably so. But based on the consensus, here's what they did. 9.7 versus 9.6, so slightly beating it a little bit. And net profit 2.84 in euros, of course, versus 3.01, falling a little bit behind in regards to this one. Another thing that the industry usually likes is the fact that they are announcing layoffs. This generally is received by the Wall Street positively because it means sort of like a more lenient way of doing operations. And definitely this has some play in fueling this surge here. And yeah, there are some tailwinds here. There has been an issue with China for ASML. The fact that the Dutch government actually wouldn't allow them to sell in China is one of the things. But on the other hand, what they have is the fact that they're practically a monopoly, as I mentioned earlier, and they're selling to everybody. And so maybe this doesn't even really matter for them for their top and bottom lines, frankly. And yeah, China in focus, as you'll see here. ASML is not allowed to ship its most advanced machines due to export restrictions from the Dutch government. Now, let's take a little bit of a look about what ASML is. The reason why they are so big is these products, the services pretty much, and products that they produce, the extreme ultraviolet lithography systems, for instance, deep ultraviolet lithography systems. They design, manufacture, and service advanced lithography systems that print patterns on silicon wafers for semiconductor fabrication. A thing that pretty much nobody else can do right now. It's an extremely expensive thing, very, very specialized, and this is what they are doing really well. And I consider this a company for the future, frankly, especially since I believe that AI is a field that is going to flourish in the next few years. And you will see that the company's revenues have been increasing through the years, so pretty massively, starting from almost 7 billion and right now doing up almost 35 TTM. If you take a look at the dashboard, you will see that the stock price has been increasing as well, pretty insanely, actually, pretty quite a lot here, doubling and more. And the P ratio is sitting at an elevated point because of that, because of the elevated price, massively elevated price. But they're buying back shares, and they have a lot of cash flow. They don't have a lot of debt. Their margins are fine. You can have a little bit of a suppressed margin from a few years ago. That's not a huge deal, but they are doing really, really well, as you see. Now, if we take a look at the DCF model, we can kind of see what the free cash flows of the company are worth to us. But you got to remember that this is not the only reason why you would be buying this company. You can kind of see, however, how expensive it is right now or how cheap it is right now. So I'm using the Stock AI Insights Lucky 13 scenario that I like to use myself, which takes a look at the revenue growth of the company, takes a look at the free cash flow margin of the company, the averages, like the revenue growth here is about 17%, the free cash flow margins are about 32%, and it goes somewhere in between, being a little bit conservative here. So you'll see 13, 17, 21, 25, 28, 31, and 13, 13, 13 is what I ask for the return. I think this one is probably closer to reality, frankly, because of how well the company is doing. Maybe 17 also makes sense. I think there's a good chance that they will keep growing at a very, very high pace in the next few years. So if we calculate intrinsic values here for a 5-year DCF, you will see that we are probably somewhere around $500 for this company right now, in terms of their free cash flows. So it is overvalued in terms of that, but you have to remember the moat and everything that they produce. Again, the fact that they are a monopoly, frankly, is a huge deal that you have to take into account. You cannot dismiss that. So I still would like to see it at a cheaper price. It's expensive, and it has gone wild in the past few months. It is a company that I would absolutely buy if there was some sort of like a mini crash or something, where it would go down for no reason, frankly, just because there is, the market has some fear, which will happen at some point. So it's a company that I'm actually noting down for the future. I don't really want to buy it at this price, even though I think through the years, it may actually service it well, even if you do that. But I'm an investor who likes to buy when things are cheaper and, there's a little bit more fear, especially when they are, they're up so much for the past few months or so. But it's a great company, and I definitely wanted to make a video about it. They did really, really well. Tell me what you think in the comments below. Remember, you can use the tool here at Stock AI Insights. There's a free account that you can join. And please also like the video if you enjoyed it. And thank you. I'll see you in the next one. Tons of earnings today. Stay tuned. I will be making more. I think Starbucks is next.